Hello everybody, my name is Alesh Eisner and welcome to the Canadian Money Talk, the channel about Canadian investing and personal finance. Please like and subscribe. I record 2 videos per week, so make sure you ring the notification bell to get notified each time one comes out. In this video, by request, I'm going to discuss a couple of crypto ETFs. The Purpose Bitcoin Yield ETF, BTCY on the TSX, and Purpose Ether Yield ETF, ETHY on the TSX. So first, some background on Bitcoin and Ethereum. Bitcoin is one of many cryptocurrencies running on top of the blockchain technology. The easiest way to define Bitcoin is to call it a, quote, digital dollar. That's all it really is, minus all the formal regulations that come with a bank, which is what makes it a disruptive concept in many people's minds. It's not a technology, it's not a company, it's your money held in digital form. Whether it truly is an asset, a currency, something else, or a combination of the above is still up for discussion. I would argue that it has no intrinsic value and is technically worth only what people are willing to pay for it. So what I mean by this is, yes, everything is worth what people are willing to pay for it, but real estate or a stock has some intrinsic value, meaning real estate you can live on, grow food on, and therefore there's some underlying value that keeps it from going to zero. With stocks, there's future cash flows, there's factories, machines, goodwill, all sorts of things. With cryptocurrencies, there's really none of that. I would argue the same is true for gold, because gold, with the exception of few high-end electronics, really has no intrinsic value either. It just looks there and it looks shiny. So I sort of not a proponent of gold either. Uh, so I do have an underlying issue with these types of assets, since they could go to zero at any point and are only propped up by people's trust in them. Gold at least has thousands of years of history, but the cryptocurrencies really don't have any of that. Now, governments, such as China already has, could shut the cryptocurrencies down, or people could lose their faith, and then the coins are worthless. The coins, by their very nature, are very volatile because there's no intrinsic underlying value to peg the coin price to, and their value is derived mostly from perception and the belief of their owners. Now, switching to blockchain. Blockchain is a technology that all the crypto coins use. It allows a ledger of the transactions to be kept on many distributed computers, and thus is immune to hacking, as well as not needing banking institutions for the transactions. To get additional bitcoins, computers worldwide are used to track and verify the transactions and to perform complicated mathematical calculations. This is called Bitcoin mining, and it's used on a commercial scale by companies to get additional Bitcoins. Blockchain is also used for NFTs, which is non-fungible tokens, to authenticate art and other applications, such as business contracts. I would sometimes think that blockchain is a solution in need of a problem, but people have used it for various things, mostly I think because it exists and therefore they're using it, and because it's the latest technology and it's sort of sexy. Ethereum is another cryptocurrency, and one many people see as a potential overtaking Bitcoin as the dominant coin in the market. What makes Ethereum different is its technology, not the fact that it's yet another cryptocurrency. Ethereum's coin value is referred to as Ether, and just like Bitcoin is bought and sold and used by investors to buy into initial coin offering opportunities. The difference between Ethereum and Bitcoin is the fact that Bitcoin is nothing more than a currency, or possibly an asset class, whereas Ethereum is a ledger technology that companies are using to build new programs. Both Bitcoin and Ethereum operate on the blockchain technology, however, Ethereum's is far more robust. If Bitcoin was version 1.0, Ethereum is 2.0, allowing for the building of decentralized applications to be built on top of it. Most of the NFTs mentioned above are run on top of Ethereum's blockchain technology. So now on to the two ETFs I mentioned and wanted to discuss. They both use the covered call option strategy, which I have done a video on previously, where they are able to earn a premium for promising to sell the Bitcoin or Ethereum at a given price, even if the current price is higher. The premium produces a nice yield because of the high volatility of the coins. You have a yield of 17% for the Bitcoin ETF and 28% for the Ethereum ETF. But this limits the upside of the ETF because it keeps losing the coins if they go up. Fortunately, the two ETFs have done nothing but go down, so that's not a worry. They've really had a tough time of it since their inception in December 2021 because the underlying coins, assets, currency have done poorly. And here you can see as of January 22nd, 2022, BTCY has gone from $10 per share to just under 7, losing 30% in less than 2 months. ETHY, not to be outdone, has gone from $10 per share to just under 6, losing over 40% in less than 2 months. So to conclude, you can get a very decent cash flow from these ETFs, but you miss out on the upside thanks to the covered calls. If the underlying coins go down, then you have the capital losses. And of course, the coins, by their very nature, are very volatile. So you stand to lose a lot on the downside. You don't get very much on the upside because of the covered calls. So the only thing you really have with these coins is the yield that the covered calls produce. If you have any requests on what you would like me to cover in future videos, please put that into the comment section. Please like, subscribe, ring the notification bell, and may you have a profitable day.